Hello, my name is Tony and I am one of the technical analysts at Cannin. Today's video is part of our ongoing investor education series with one simple goal, and that is to make you a more consistent and profitable trader, which is no small task in the world of trading. In fact, the rules of trading, though basic, are something every trader throughout their career needs to constantly be reminded of. Whether you trade as a hobby or a professional, failure to stay focused on the most basic rules of trading will result in pain, financial loss, emotional anguish, and more. Sounds like a fun business, right? One that everyone seems keen on having some level of involvement. Well, it can be fun. Trading can be profitable, but you need to stay hyper-focused. You simply cannot let your guard down and overlook the details. So let's discuss some of these rules in no set order. Rule number 1. Manage risk. Your capital is your business's inventory. Once you are out of capital, you are out of business. I cannot emphasize this enough. In my own trading career, I have made the same mistakes all of us make, and I have seen financial ruin among many as a result. Risk management is everything. In fact, a poor trading style can be offset by outstanding risk management. Rule number 2, manage emotions. Yes, trading can be emotional. In fact, studies show the pain of losing is greater than that of winning. Trust me, I've been on both sides of the coin. Losses can be tough, but they are part of the business. Emotions become unmanageable when you let trades get away from you. For example, a hard stop is overlooked. You keep moving the stop lower and lower as the losses get greater and greater. Eventually, you feel as if you're too into the trade to exit. Wrong. Always honor stops. Even a profit. Too many traders want to capture the entire move. It's impossible. Take what the market gives you. Quietly step aside and be happy and move on to the next setup. Rule number 3, know your upside and downside targets. If you don't know where you want to exit a trade for a profit or a loss, then you are not ready to take a position. It's that simple. Rule number 4, let trading become mechanical. By that I mean remove emotion. Once a trade is taken, stay focused on your targets as per rule number 3. When met, exit, regardless of whether it is a profit or a loss. Move on to the next trade. Rule number 5, trading is a business. There are good days, bad days, and sideways days. It is the combination of all of these days that produce long-term results. Don't focus on one bad day or one bad week. Focus on the long-term goals. Periods of winning will feel great. Drawdowns not so great. But all of these phases are part of trading. Accept that reality. You'll be better for it. Rule number 6, markets can and will go against you longer than you think. A big move higher is not a telltale sign to go short, nor is a big move lower a sign to go long. This is where you need to add in momentum indicators and more, something we'll discuss in other videos. Remember, just because a big move happened does not mean it is a great trading opportunity. Be patient. Rule number 7, similar to rule number 6, be patient, but don't wait for every indicator to line up. Part of trading is knowing when to get in and when to get out of a trade. But if you wait too long for verification, for all the moons to line up, you'll likely be too late. I can go on and on with rules, but these are the most important. Rules you should always remind yourself of. But let me leave you with one final thought. Trading is not one strategy, rather it is multiple. There is an exit strategy, an entry strategy, even a risk management strategy. All of these must work in unison for you to find success. In fact, one can easily argue that entry is not very important. It's what you do while in and after a trade that truly defines your success in this business. One analogy I love to use is that of football. Good defenses win Super Bowls. A good defense can keep a team in the game until the offense is able to put up some points. Think of risk management as your defense. Winning periods will come. Just make sure your defense is there to always keep you in the game. So enjoy, remember to always learn, and most importantly, manage risk. Thank you for watching.